Right, good morning, everybody. Welcome to the room. I see a lot of you funding people popping in, checking it out. It's good to have you in here. Good morning, Miss Trina. Good morning, Cav. Guys, I hope everybody's doing amazing today. It's Friday. We made it, end of the week. And all of you are sad that you don't get to trade tomorrow. That's the beauty of being a day trader, guys. You actually enjoy what you do. What a gift, right? What a gift. Hey, what's going on, Sergio? Guys, my name is Mark, and I talk a lot. The pullback profit. Make it your goal to shut me up by asking so many questions. Make it your goal to turn this into a conversation rather than a lecture. And what you'll find is you'll get more out of the classroom. Um, Ron said yesterday in a little conversation, he goes, man, a lot of new people asking a lot of great questions and a lot of questions that the older people should have asked sooner, which I really like. Um, to which I replied, if you ask a lot of questions, you won't be new long, guys. You won't wonder about anything. This classroom is designed to give you everything that you need. It is an educational room. I don't call trades. I don't tell you how to trade. I don't tell you that what you're doing is right or wrong. What I do is I teach you guys to read indicators. That's my goal. That's my job. That's in the description. But before I do that, I check news each and every morning. It's important to me that I not find myself in a position when high impact news is released. If you're with Nexgen Pro Trader Funding, it's prohibited. You will lose your account. What a silly way to lose an account. But it has happened. That is what we call avoidable losses. You can't see my screen. Hold on, let me reload it. And let's see if that works, Sergio. Did that bring it? Yep, cool. So guys, at 10 a.m. today, we have the preliminary UOM consumer sentiment and inflation expectations. Now, I personally don't trade news. I don't wait for the reaction. I don't try to predict what it's going to be on whether it's positive or negative. I'm just not that smart. What I do know is that these red flag events can disrupt the patterns that I trade. And guys, when I trade a very specific pattern. It's a pattern that is testable, that is provable, that is repeatable. And that pattern can be proven beyond a shadow of a doubt with a little bit of research to win more than it loses. And as luck would have it, I teach you guys the exact same pattern that I trade personally. Now we just got to wonder if I'm a Yahoo or not, right? Guys, I teach the high probability trend trades. Whether it is NinjaTrader or whether it is TradingView, doesn't matter. It's just a pattern. It's a pattern that works on all the markets. I've used it on crypto. I've used it on, gosh, currencies. I've used it on energy. I mean, if the market goes up and down, guys, you can find your pattern. I'm going to hand you a checklist. I'm going to give you guys rules. Well, Tesla, can you hear me today? All right, guys, let's see what we have. Let me pull up. We're going to get Tesla. Um, Hold on. Let me see where my settings are. Um, that's not me. That's me. Hold on. You are on web, not app. Check your sound mixer. Make sure it isn't muted. Make sure you are current. That was hurting someone previously. They uninstalled and reinstalled, and it fixed it. Or get with Jason. See if he can help. There we go. Those are your options. Guys, don't go a whole week without hearing me if you need to hear me. My goodness. That's like walking into a class in college and the professor doesn't speak English and it's all you speak, and you wait a week before you go, hey, wait a minute, I don't speak Mandarin, and you waste a whole week. So, guys, we're going to go through and we're going to do the same thing that we did yesterday, the same thing I'll do on Monday. I'm going to hand to everybody in this room a KISS plan, whether it is NinjaTrader or whether it is TradingView, guys. And the KISS plan is designed to be a stepping stone in your learning journey. It's designed to teach you to read the indicators, to recognize advantages, to optimize your chances of success. Both for NinjaTrader as well as TradingView, those will be placed in the room right now. And I'm also going to give you spreadsheets that are to be used as study materials to recognize the patterns that are being taught. And I also give you the PowerPoint that I'm using to teach. Your plan that I've just placed in the room that you can download and make your own should you choose to only has 3 rules and uses just 2 charts. Now, if you're a single chart trader, that feels excessive. There's a reason that I do it, and we'll talk about the whys. But the very basics, the foundation, the KISS plan, these are designed to get you recognizing advantages. And that's it, to be able to look at your chart and say, oh man, this is good, this is great, this is awesome, I'm going to go find an entry. Chart reading, doing nothing, is about 90% of your day. You'll be actively trading about 10%. And I took a picture of this yesterday. My brother and I were laughing. I take a lot of pictures, guys. This was it right here. This was my day yesterday. My average trade time was 18 seconds. That's how fast the market was moving yesterday. That's how quick I was getting in and out of positions. My longest trade was only 1 minute and 45 seconds. I thought this was interesting. So you're going to find that you do a lot of nothing. There's a lot of waiting. There's a lot of insisting that the market give you what you want. And then a small portion of your day will be capitalizing on those advantages. If you focus on chart reading before you focus on making money, you're going to learn 3 things that are going to pay huge dividends for the rest of your trading career. You're going to understand through your chart reading where the market is likely to continue, likely to go, and likely to stop. Notice that I use the word likely, not where the market is definitively going to continue, where the market will 100% go, and where the market will absolutely stop, because I don't know what the market's going to do. But what I do know is that I don't have to know what the market's going to do to still be able to make profits. These concepts that you're going to learn will become ways to enter where the market is likely to continue. It'll be awesome targets where the market is likely to go, and it'll be this huge pump in the brakes, I'm going to choose to do nothing moment, putting you into the 90% rather than trading into an area where the market is likely to stop. I added these pictures to the PowerPoint because whether it's NinjaTrader or TradingView, the methodology is one thing. It's singularly focused. Let a trend be established, wait for a small fight within that trend, pinpoint where the fight's most likely to be lost. This is what your rules do. And then hope that the trend resumes. That's it. This is NinjaTrader. This is what it looks like on NinjaTrader when a trend trade is met. And this is what it looks like on TradingView. It's the same thing. Establish a trend, wait for a fight, get in to follow the trend. And we're going to do that with rules. Rules are your trading Bible, guys. Live and die by your rules. Learn the Fibonacci rule, learn the trigger line rules, learn the rules for when it's okay to trade. And if you really want to get a leg up on the competition, maybe you're in a trading contest with your buddies, Let there be two options. My rules are met. I choose to enter the trade. My rules are not met. I choose to not enter the trade. The second one is the harder of the two. It really is. So I'm going to give you rules for both platforms. It's only three. You can simulate and you can practice and you can break all the rules and you can make all the mistakes and you can mess things up 1,000 ways, and it's okay because you're on simulator. Simulator's not trading, guys. Simulator is getting the repetition, the muscle memory to build confidence in your plan. It's getting you to where you don't have to think about what it is to do when it's time to do it. It just becomes this unconscious, like you're in the zone. As you go through your simulation process, your learning process, post in the room. Every time you drop a picture in this room, it's a private session. Every time you show me what you did, tell me what you did, show me where you did it, we will embrace the rules that you say that you're following. We'll make sure that you're reading your chart correctly. And the thing is, if I see a way to do it better, to reduce risk, to maximize profits, I'll drop that little knowledge bomb on you. I'll say, hey, I see what you did. I see where you did it. But now let's take this into consideration. Had you entered here, you could have had way less risk. And if you would have had a target right there at that area that could have stopped the market, you could have turned this loser into a winner. And it's those conversations that move you forward, guys. So post in the room, take advantage of that. Um, and then keep it simple. There's only two trades in your plan. And if you don't learn the first trade, the rest of the trades are difficult. I'm going to tell you that right now. If you don't learn the very basics from the first trade, the rest of the trades aren't just going to jump off the page at you. So what I did is I did a little for instance here, guys. And I'm going to drop this in the room. I use language to describe a visual. So when your rules are met, there's a phrase, there's words that support that rule being met to make sure that it actually is. And if you don't learn the first three phrases and how to do it, the rest of the phrases become a little difficult. So keep it really singularly focused in the beginning. Really look for that best of the best pattern, and then you'll be floored at how soon you have the ability to write your own plan, and then it's based on your chart reading. So what you've got to do is you've got to learn the patterns, guys, and the patterns look the same. The pattern is just that. It's a repeatable, testable, provable, verifiable pattern that you'll be able to prove wins more than it loses. We're going to start with NinjaTrader, and as advertised, it's only three rules. When a rule is true, it creates an advantage. Rule 1, momentum. Rule 2, clear path. Rule 3, entry. That's the recipe for a trade. That is the best trade. This is what we call a high probability trend trade. And that means that each indicator on every chart agrees with the rules for the trade. This is a pattern that you'll be able to prove typically wins in that 70 to 80% range. This is a pattern that creates an enormous amount of confidence for new users because you're actually getting that sensation of victory, which is just amazing. Hey, good morning, Queen Elodie. Nice to have you in here. And then these three rules take two charts. That's it. So on NinjaTrader, remember that's what we're doing first. If you're one of my TradingView people, pay attention, but know that your time is coming. Everything begins on a large chart. A large chart is a very slow chart, guys. It's a broad stroke of a brush. It shows the overall opinion of the market. It takes the most current printing bar on a large chart to define the direction of the market, to let you know that the momentum is in your favor, and it shows you the areas that could be problematic. And all of that happens in this one bar, the first bar. And when rules 1 and 2 are met on a large chart, your market is way down here, and your fear of missing out is like full tilt boogie tingling. That's when we turn our attention to the small chart. This is your entry chart. And your entry chart refines that big picture, guys. It shows you the inner workings of this one bar. It'll show you that fight that we talked about that tends to happen always. It'll show you exactly where that fight is most likely to be lost. And inside of that one bar, if it's going to be a winner, you'll see the trend resuming and going in the direction with the momentum not into areas. And all of this happens on that one bar. And by using this refinement chart, you'll be able to pinpoint. You will be able to reduce risk. You will be able to maximize your profit potential. We use two charts, both platforms, to remind us who's in charge, guys. And it's not us. Your big chart is the large crowd, institutional traders, big money. I don't care what you call them. They will run you over. They will take all of your pennies and leave you crying in the dirt, guys. The large crowd, when they wake up and say, hey, you know what? What a great day for an uptrend, you typically end up with an uptrend. And when they tell you that there's nothing in the way to stop them, they just keep pushing and they create momentum, guys, and the large crowd typically wins. So your methodology is designed to keep you in their loving embrace, in their good graces. We're going to go with the large crowd. That's what the large crowd does or the large chart does for you. Now, the small crowd is still way more powerful than you, and they don't even know you exist. They don't care about you, but they hate the large crowd. So they create what's called a retracement. That's the fight. That's that little push down when these guys want everything to go up. Your rule number 3 will pinpoint precisely where they are most likely to fail. And guys, when your large chart rules are met, they typically fail 70 to 80% of the time, which means if you're following the large chart rules, if you're using the entry rules, you're going to put yourself in a position to see the potential to win up to 70 to 80% of these trend trades. So what we're talking about is a process, and the process is what yields the results, not the desire for money. We're going to use indicators to do it. For those of you that don't know, Nexgen has been teaching people to day trade using Fibonacci for the better part of 30 years. Our longevity in this business is unheard of. You're going to use those areas on both charts. Now, one of the things, I say that I use language a lot. Areas are bouncy. Remember that. Areas are bouncy. Divergence highs, divergence lows, resistance, support, yellow one-to-ones, even a mid-band. You don't have to know how they come to be or what the programmers did to make them happen. All you need to know is that areas can create a bounce. And then we're going to use trigger lines to really make sure that the 3 rules are in play. You have small triggers, 2 solid lines working together to create the small triggers, large triggers, 2 dashed lines working together to create the large triggers. And your trigger lines will be green when they're up, and they will be red when they're down. Same with the background. When the trend is up, it's green. When it's down, it's red. Trigger lines will be used to define momentum, making sure that rule number 1 is met. Trigger lines will be used to make sure that you're not trading into a termination condition, and even more so, to let you know when that termination condition is no longer a problem. And then finally, those large triggers are how you're going to pinpoint your amazing entry, guys. So we're going to use areas and triggers. We're going to use them for 3 rules, 3 advantages. 1, trades, building the most amazing foundation that you could ever build so that you can do more with the software with your ability to read the indicators. Your first 2 advantages, momentum and path, large chart advantages. This is the visual I want you to get. This is what it looks like when your rules are met. This guy has room to get to the mountains, and he's going to be hard to stop, or she's going to be hard to stop. Either way, let's not assume pronouns, right? Guys, momentum and path is going to be the core of like everything that you do. And you're going to see a lot of people in this room omitting the entry rules and jumping on momentum and path and doing great things with it. So make sure that you learn these pieces individually. Rule number 1 says strong trigger lines. Large chart needs them, has to have them. It's imperative. I won't even look for rule number 2 if I don't have strong trigger lines. This is the easiest rule you'll ever get. On the very first bar, printing, you're either going to have separation between the small and large, or you're not. And I know that sounds, Mark, that's too easy. That can't possibly be a rule. Guys, when the background is green, you're in an uptrend. When your small and large triggers are green, you're setting yourself up for momentum. And the look is really this simple. When your small triggers break above and away from the large triggers. That separation is strength. This is strong triggers. It looks like scissors, ready to cut. So a little space can get the job done. A lot of space can get the job done. Separation is strength. The same is true in a downtrend. If the scissors are open, if the colors match, guys, rule number one is met. Honest to goodness, it's that easy. So if you look at a large chart and the colors don't match, you don't have momentum. That's your cheat code. If your first bar looks like this, smalls, above the large, space between, you have the advantage of momentum. It has nothing to do with price bars or areas. It's simply separation is strength. If you're looking in a downtrend and the smalls are below the large on the very first bar, separation is strength, guys. Does that make sense? And when there's no separation, exhibit A, you have weakness. And when you have weakness, it's the opposite of having strength. That's what it looks like when your rule is not met. So you'll see the market go down, and you'll see the market go up, and you'll see bursts of momentum, and sometimes you'll see where there's not momentum. And guys, if you remember separation is strength, you never get fooled into believing that weakness is going to take you where you want to go. With strength, the odds are favorable for the market to continue in the direction of the trend. With weakness, closed scissors, anything can happen up or down. Only one of them creates the advantage of momentum. You guys good with that? That really is one of the easiest lessons. Separation is strength, and you guys are going to see how I work language into everything. So what I see and what my brain thinks are going to take me to the promised land. Rule number 2 says termination false. I hate the way this is worded. Rule number 2 says you can't have a termination condition. No areas likely to stop the market. Kevin Schmidt, sometimes it takes a couple times to click. That's okay. But once it does, once it gets easy, you're like, oh, I'm never going to miss it. Guys, you want to have room to targets, right? Because we're here to make money. Is anyone not here to make money? Room to profit targets, no terminations. We're going to call it a clear path. So what's a termination condition? Well, it's a horizontal line on a large chart, guys. This is where the large crowd makes decisions. This is where buyers buy and sellers sell, and this is where fights happen. And the people in control respect these areas because the people in control created these areas, guys. These are based on all historical. So to define a termination condition, to know when it's time to pump the brakes, to make sure that you're not trading into something that could stop the market. Once again, language is going to take you there. We're going to let the large crowd price get to a line of resistance. We're going to let the large crowd, those price bars, get to an area of support. And when price reaches an area, that's the first phrase that you utter. Oh, price has reached an area. I want you to say out loud, I want your animals in the house to react to you asking, where are my triggers? Price has reached resistance. Where are my triggers? Well, all of my triggers remain below resistance. Resistance is defined as a termination condition. When price reaches support and all of your triggers remain above support, support is a termination condition. And there's 3 things that can happen when you reach a termination condition. Price is up, they're going, they're happy, nothing in the way, life is good, and then boom, price reaches resistance, my triggers are below, it's a termination condition. The rules say absolutely no trades into that area. Be calm, because that area could break. That area could set off a fight between buyers and sellers that you don't want to be a part of. That area could reverse the market completely. I never know what's going to happen. So my rules say, Mark, since you have absolutely no idea what the reaction is going to be, choose to do nothing and sit on your hands and embrace that 90%, because it's better to have a clear path than it is to trade into a termination condition. More often than not, this look results in a loss. Everybody good with that? That's how you define a termination. It'll be easy to see if it reverses the market. It'll be easy to see if it kicks off a fight. But guys, when you are watching an area break, there's an order of operations. There is a chain of events, if you will. So I've kind of numbered through what it looks like. First, price reaches the area. Guys, every area you reach will be a termination condition, even if it's for a fraction of a second. Every line that you reach into and the triggers remain above support just says, be cool, wait, hang out. Let's see what they're going to do. Let's see if they want to break it or if they want to bounce. Hell, I don't know. If they're going to break it, notice that there is momentum because we don't even look for rule number 2 if rule number 1's not met. If the small triggers absolutely smash through that area with all of that momentum, this is what we call a 50-50 look. 50% of my triggers are below support that I'm wondering if it's going to break. 50% of my triggers remain above support. Has nothing to do with price, has nothing to do with the color of the fibs. Trigger lines will tell the story. This 50-50 look says, hey, James, that area might break. Matt, this thing has the potential to break, but it's not a clear path yet. Not yet. The second trade in your plan is what we call the 50-50 trade, and it allows you to capitalize on that potential to break. In the plan, it says let 3 of the 4 trigger lines get below. That's your best look for a breakout. 2 triggers is maybe a little below average. 3 of the 4 triggers, that's when things start to get good. But it's not until all 4 trigger lines, both small and both large, get below the area of support. Then the area of support is broken, and you'll find that support behaves as resistance. Now I want you to see something. It doesn't matter if that area is pink. It doesn't matter if that area is blue. It doesn't matter if that area is black. It doesn't matter if that area is green. Trigger line location versus the area is what defines it as either a termination, the potential, or a clear path. And once your path is clear, guys, with that momentum, you're looking for entries because your path remains clear until you reach the next line. And when you reach the next line, you're going to start over. You're going to say, all right, I have to start counting triggers again. So the S&P is clearly caught in a range, and I want you to see how effective Fibonacci can be. Here is price reaching a divergence high. There it is with the potential to break, but without strength, you get a big, ugly retracement. And without strength, the market actually reverses, pushes down with momentum, breaks a few areas, and then with 3 triggers through, even with the momentum, that area ultimately doesn't break. And they try to push up, and they reach the divergence high, and with 2 triggers through, the divergence high doesn't break. And back to support with absolutely no triggers, and back to resistance with only 2 triggers, and back to support with absolutely no triggers. Guys, the people who control the market know exactly where these areas are, and very often they fight one another at them. Look at that, to the tick. Weak triggers didn't break. Huge retracement, no triggers through, continuation. Resistance breaks. They come back and test it as support. Guys, if you do the work to learn this simple trigger counting, you will never trade into an area that has the potential to reverse the market. And you will learn to pump the brakes when it only has the 2 trigger weak potential. And you will jump on that mofo as a medium probability trend trade if the rules are met from your checklist when 3 of the 4 triggers get through. But because it's not a clear path, you're going to manage it assertively. But when all 4 triggers get through and your path is clear, you are going to be chomping at the bit, looking for an entry, excited for the fight, because that is your absolute best of the best look that tends to produce more winners than losers. The easiest trades you will ever take will be when Fibonacci resistance completely breaks, when you have momentum, and you're going to define right where the fight is most likely to be lost by the small crowd. Or when the market reverses from a key Fibonacci area, produces momentum, has room to the next area. you're going to pinpoint right where the fight is most likely to be lost using the smaller, faster chart. It looks like a tail on the large chart. That's the pullback. That's the failure. That's the continuation. And guys, that's the pattern that typically wins 70 to 80% of the time. So it's important that you can identify momentum so that you can say out loud, the market, the odds are favorable for it to continue in the direction of this already established trend. And it's imperative that you can say, I have a clear path. There's nothing in the way to create a bounce. There's no place for the large chart to react. So this is the best of the best, the golden goose, the magic beans that take you up the stock, guys. And this is what we're waiting for as a brand new user because it optimizes your chances of success. Sad note, there will be times when your path isn't clear, guys. There will be times when you don't have momentum. This is 90% of your day. 90% of your day is doing nothing, guys, but it's okay because the futures markets trade on average $220 billion hourly. The S&P, which most of you will trade, exchanges about $174 million a day. The NASDAQ, that's what I trade, a lot of you trade it on TradingView, averages about $270 million exchanged a day. Find a way, and I'm giving you the path, find a way to consistently make $400 a day. Do it over the course of a trading year. And realize that I suck at math. $400 a day. 252 trading days in a year is a six-figure income. A six-figure income based on only $400 a day. And guys, this is the goal, right? We all want to make all the money. We've got to learn how to make the easy money first. We've got to learn how to do nothing. It is the most valuable skill you will ever have as a day trader. So let's recap. Rule number 1 has told me without question, no hesitation, 100% that I have odds favorable momentum. Where is the picture that I'm looking for? We're going to use the large crowd, small crowd. Rule number 1 is in effect. The triggers are strong. Life is good. I can't find my picture. I swear I don't drink before class. There it is. I have strong triggers on my first bar. The odds are favorable for the market to push up. Price has not reached an area. All of my triggers are past the previous area. I have odds favorable momentum. I have a clear path. The large crowd has done their job. I don't need them anymore. This is such a slow chart. If I get an entry, these advantages aren't going away. So now I go to the small chart. And I need the small crowd to fight. I need it to push. And I'm going to be waiting for their push to enter the highest probability trend trade that I could ever take. And language, if you learn this phrase. Have I mentioned that if you just learn the phrase, trading gets a lot easier? Guys, I'm going to use a limit order to buy or sell a pullback in an area inside of triggers. I am going to wait on the market. I'm going to force it to fight. I'll be at an area, at a fib, at a mid-band, at a yellow 1-to-1 because areas are bouncy. And that area will be inside of triggers. Learn how to say this in one breath. You will never miss your entry. Learn how to say this in one breath. You will never wonder if you took the right entry, guys. The verbiage puts you where you need to be. I made this for you guys. I replaced the rules with the words that describe it. So we're going to use a limit order to buy or sell a pullback. This is your entry pattern. Your pattern's going to look the same every time, guys. And it's going to start with the large crowd. The large chart says up. I want to go up with it. The large chart has strong triggers. I want to ride that momentum. The large chart has nothing in the way to create a bounce. I'm excited about the clear path. So I turn my attention to the smaller, faster chart. And this is where I go pucker factor 50 because everything on every chart is screaming up. I mean fast, and it's going without me. And all I want to do is jump in. All I want to do as a brand new user is find a way to make this money that I don't feel like I'm making. Guys, you're going to learn that the fight happens more often than it doesn't. And it starts with a reversal bar. And that reversal bar says, hey, here comes the pullback. That little push down when everything over here says up. And you'll be able to use the trigger lines. You have two sets of large trigger lines on your entry chart. They will define where the retracement is most likely to go. So somewhere from the top of the trigger lines to the bottom of the trigger lines, that's where the retracement's most likely to go. Trigger lines are moving averages. Price returns to moving averages. It's called regression of the mean. That's as mathy as I get. My retracement zone, where it's most likely to occur, not guaranteed, will go from the top of the trigger lines to the bottom of the trigger lines. But trigger lines aren't bouncy. Areas are bouncy. I'm going to buy or sell a pullback at an area inside of those trigger lines. And those areas, guys, it's a very specific list. It is either Fibonacci support or resistance. That was the worst spelling of Fibonacci ever. There we go. It could be a yellow, and it's important that you pay attention to the color. A yellow 1-to-1 or a mid-band. None is more important or stronger than the other. It's just an area inside of triggers. This is where the market is most likely to ricochet and go in the direction of the large chart advantages. Sometimes you'll have a window. There'll be multiple areas. And the rules say, because of the large chart advantages, because of the momentum, because of nothing in the way, your job will be to activate a limit order just above that highest point of support and pray for the small crowd to come get you. And if they do, you're in the highest probability trend trade you could ever take. And now there's this reality that we've got to face as traders. We'll use, what color? Let's use orange. If the small crowd can push through the highest area of support, it's okay. Rule number 3 is still in effect. If the small crowd can push to the bottom area inside of those triggers, it's okay. Rule number 3 is still in effect. If the small crowd can get all the way to the bottom of those triggers, still in the retracement zone, it's okay. Rule number 3 is still in effect. But if they get 4 to 5 ticks below that retracement zone, your KISS plan says that is where the market should not go. This is where you will cut ties with that amazing trade and you'll say, damn it, the small crowd won this one. And guys, 4 or 5 ticks below is where the market shouldn't go. Any lines beyond the triggers are not a part of the entry equation. And now here is the reality of trading. Anything, anything that wins 70 to 80, I can't type this morning, must lose 20 to 30. It's not the one trade. It's the 10. If I can win 7 of 10 with a little bit of management, guys, I should be pretty good. I should do just fine in this world. 70% winners, it's been done, but it's difficult to have a losing day with it. Your management will need a lot of help. So learn the pattern. Trust the pattern. Accept the losses when they come. It's a cost of doing business, guys. Losses are a normal part of a positive equity curve. If anyone tells you I don't lose trades, they are absolutely, positively full of shit. And I don't mind cussing in your ear for that one. Everybody loses. It's just a part of it. The key is to lose less than you win, to put more in than you let them take out. So in a downtrend, with strong triggers, nothing in the way, I'm going to wait for the fight, the reversal bar. The reversal bar signals the pullback. It's not the entry. I know right where the fight's likely to go. Somewhere in those trigger lines, guys. That's my retracement zone. I know exactly where it's most likely to bounce, one of those areas inside. My rules say activate a limit order just below that lowest point of resistance and hope things work out because you've done all you can do. Absolutely no lines beyond the triggers are used for entry in the KISS plan that I've given you. This is where initial stops are placed. That is precisely where the market should not go. But in the KISS plan, I want you to see, because I like to show things, your initial stops are 4 to 5 ticks below, guys. That'll probably be the biggest risk that you ever experience. More often than not, you're going to get a reversal bar in the direction of your trade. If you're looking for a short, you get the down bar in the direction of your trade. Your KISS plan that I've handed you in the room that's designed to optimize your chances of success, to teach you to put stops in the right place and learn how to get paid, says put your new stop 2 ticks above that reversal bar. 2 ticks below that reversal bar. And guys, you will be floored at how often you see Nexgen users with 3 or 4 ticks of risk going into the highest probability trend trade that I could ever teach. Doesn't guarantee a winner, but I'll tell you right now, 30 bucks. 30 bucks doesn't sting. It just doesn't. And all it is a pattern. And you can use these tails on a large chart to go back and study the pattern. If you see the momentum, if the potential to break is there, guys, when that's true, the market is all the way up here. And the logical brain says, shoot, dang heck, I don't have any room to make money, right? That's normal, that's logical. But when you understand the methodology, what you realize is that from the perfect entry at the area inside of triggers, there's an awful lot of room to make money. And when you wait for the pullback, you'll have the least risk ever. And if you reduce behind the reversal bar, you've got virtually no risk on the perfect trade. And guys, I must say it again, it's just a pattern. Whether it's November of last year, whether it's 2021, whether it's 2022, or whether it is one of the hundreds of pictures of the pattern that you guys have posted in the room that I have stolen to use as a study guide. And a lot of these are dead links. One day, I'm going to pay one of you guys 73 cents to go through and clean these out. There it is. All the momentum, room to trouble, cleared the previous, pull back to the area, inside of triggers. When was this one? This was 2023. He probably will, huh, Jen? This was 2023. So guys, if you're new to me, if you're learning these patterns, you can go back and study it. Open up your large chart. There it is right there. Scroll back. Look for momentum. And guys, they did a lot of just bumping and shaking. Look for the potential to break. We'll use this one as an example. And then with the momentum, with the potential to break, let's go see what it looked like on a small chart. It either is or isn't. It either worked or it didn't. It either made it to an area inside of triggers as it did or it didn't. I don't know. I'm not cherry picking stuff, guys. I'm going back to the market an hour ago. Pulled right back to an area inside of triggers, and then the market continued up right to trouble where it fizzled out. That's a good way to make money. Let's go see if it happened again. Whoa. Not quite momentum. We'll circle. Well, that one is right into a termination. Sometimes you got to scroll back, guys. 90% of your day. 90% of your day is waiting for the best of the best. Look at that termination. That's beautiful. 90% of your day is looking for that solid look, that great look, that awesome look, that, oh my gosh, I've got the potential to break look. Life is good. And pulls right back to the areas right in the retracement zone, never goes where the market shouldn't. And this one ultimately dies out, fails, but there was a lot of room to make money before it did. So I'm going to encourage you guys, learn the pattern. Learn to not trade into lines when none of the triggers break. Look at this. Learn not to trade into lines when none of the triggers break. Realize that your methodology makes you this colossal badass that is in control of everything in their life, everything of their trading, and you control the entry. They can't make you. So when you know what's good, all three, you're excited. You know that it's the best of the best. And when one of your advantages goes away, you're like, whoa, this is medium probability, not high probability. I'm going to manage a little more assertively. And the one that I hope all of you latch onto is when 2/3 of the good stuff goes away, you may say, sounding smarter than the person sitting next to you, I choose not to enter this trade. There's too much opportunity in the market for me to forfeit 66% of my advantages. I'm going to go toast a bagel. I'm going to go have a waffle. Guys, that is Ninja Trader. Welcome to it. 3 rules, 2 charts. Build a foundation. And now for you guys are like, yeah, but I see them doing other stuff. Where's my picture? I had to make this for someone so they could wrap their brain around it. The rules taught are for the high probability trend trade. Everything else is your chart read, either helping or hurting. It's you looking at your indicators and saying, this is good, this is bad, this isn't what I want. So at first, guys, don't worry about all the things that could happen. Look for the best. And these will eventually work their way into your plan. Keep it simple, keep it focused. And now for Trading View. People are ditching. They're like, man, they didn't even talk about price action. This sucks. Trading View is a different platform. Trading View only takes 3 rules. Trading View only needs 2 charts. Guys, if you're in the funding company, I'm going to say it. I'm just going to throw it out there. I'm going to be bold. There are people that are finding success with nothing but a trend trade. There are people finding success with nothing but a trend trade and then deciding to abandon everything that's bringing them success. Because, well, if I can do this great, I should be able to do everything great, guys. There's this idea that trading is boring. You do the same thing every time because it works. You got to believe that they're coming. So your large chart is a 15-minute. I don't know who needed to hear that. Large chart is 15-minute. It's slow, guys. A lot happens in 15 minutes. It will define direction. It will define momentum. It'll define key targets. It'll define terminations. The 15-minute will let you know what the people in charge really kind of want to have going on. The 1 minute will define the immediate strength of the market using those small triggers. That's your immediate strength. Just believe it. It'll pinpoint right where the fight is most likely to be lost. You'll use that for entry. Your large chart on Trading View doesn't have large triggers, not the way I present it. The large chart on Trading View doesn't even have background colors, and it only has small triggers. They're either up or down. Cyan is up, white is down. Guys, change the colors if you want. It's up or down. Your small chart will have small and large triggers. Now for the trend trade, as taught, you don't even need the large triggers. You could pull them off, never look at them, and only take trend trades. They create opinion in regards to trend trades. Small triggers will tell you exactly when to enter your perfect trend trade. So there are small and large because the second trade on the plan is a momentum trade that relies on that second trigger. Both charts have areas, guys. Whether it's TradingView or Ninja Trader, the T3 indicators are the T3 indicators. Divergence, highs and lows, one-to-ones, mid-bands. You'll see outer bands, which are just mid-bands on the edges, pretty much. And they're all bouncy. They can all stop a market. They can all create a ricochet. They can all create a bounce that you don't want to be a part of, guys. Areas are bouncy. And then to do the trend trade, we're going to use those areas. We're going to use those triggers. We will define the trend. Rule number 1 says don't trade directly into areas on your large chart. Room to targets, clear path. Rule number 2 says, seriously, don't trade into areas, even on the small chart. Room to targets. Guys, it's the same rule. Rule number 3 says, buy or sell a pullback at a 1-minute area. But wait for a close on the correct side of the triggers, the weak side of the triggers, pinpointing right where the fight is most likely to be lost. So let's break it down. Trend is defined by the large chart small triggers. They are either up or they are down. Now, if up and down confuses you, Google it. You'll have it figured out quickly. If you can't tell if they're up or down, if they're not screaming one direction or the other, the large crowd's having difficulty establishing a solid trend, which means that you're going to have difficulty taking a trend trade. It's okay to force them to be very decisive. Once you have the trend defined, you'll go to the large chart and you will ask yourself, from wherever I'm going to take this order, this entry, do I have room before I hit something solid? Do I have room to make money? Is there nothing in my way that could create a bounce? Because if there is something in my way that could create a bounce, I don't want to go look for an entry because it might create a bounce. Bounces kill trades. The same is true on the 1 minute. From wherever you're going to enter that trade, do I have room to make money, guys? If I enter a trade directly into resistance, resistance has the potential to push the market down, to take out my stop, to create a loser and a couple tiers that I don't want to carry into the weekend. The same is true with support. So rule number 1 and 2, keep you singularly focused on not trading into areas. And yes, they are the most broken rules because it means you got to sit still every now and then. But when they're true, this is your entry pattern. So this particular entry is a trend trade long. This is only the 1 minute chart. The small triggers are up, the large triggers are up, everything's going up, the trend is established, and I need a fight. I need that small crowd to push. Small crowd push on TradingView starts when the small triggers turn down. The large chart triggers are up, and now these triggers are down. The immediate strength is pushing against the trend. So I'm going to look for an area. I'm going to look for 1-to-1s, a mid band, a zone, whatever you're using. I even have one right here. But we don't wait for the market to get there with a limit order, guys. On a 1 minute bar, that's too bold. There's too much chance of just getting run the fudge over. So when I get to the area, I'm looking for a very specific pattern. I need an up bar because I want to go long, a reversal bar in the direction of my trade, and I need both of the corners of that bar to finish. The bar has to stop. The countdown is over. And when that bar prints, I will smash buy. Give me that trade. Give me that long trade. And what this pattern right here does is it keeps you from fighting the immediate strength. And it puts you back in the good graces of the large chart. That's where the small chart is most likely to reverse to get going in the direction of what the large chart has given you. So when the smalls are up, so am I. When the room to targets are there, I can't wait to look for an entry. When the small triggers roll against me, I know that the fight is on. I turn my attention to an area lower, and I don't enter until the market gives me a reversal bar in the direction of my desired trade that finishes above those small triggers. That's the weak side of small triggers. That's where reversals come from, whether it's the big chart or the little chart. But all we've done is we've gotten back in line with everything that the large crowd has told us that they want. When the triggers are down, I'm going down too, guys. When there's room to trouble, I'm going to go look for an entry. When the small triggers roll up, the fight is on. I identify my areas that are higher. Guys, you will call your shots and sometimes wait 8, 9, 10 minutes for it to get there. And then my entry is a close below the smalls, a close on the weak side of the smalls, pointed in the direction of my trade. It's the down bar, the close below, and the small chart tends to resume the same direction as the large chart. And it's just a pattern. Let's look at, whoa, where did they go? What is this? This is NASDAQ. My triggers are up. I'm above trouble. Well, there was my pullback back to the area. There was my close above from 95 to 12. There was only about 7 points, about $140 per contract. Maybe someone will show us that trade. I'm not sure. But that is what a trend trade looks like. The pullback, and that's a huge bar above right at the open. That's what a trend trade looks like. And it happens over and over. Looking for a good one. Pull back to resistance, close below the triggers. I don't know what direction the triggers were going here. And sure enough, the market goes down to the next area. So we're just trading patterns. And look how it changed here. Now my triggers are still up, but I'm below trouble. Do you see it? They couldn't break above that divergence high. Look what the small chart is doing right off that termination. So if I'm going to take an entry, triggers are up. I've got room to get back to it. It's going to have to come either from here or from here. From down here, I won't have any room. From up here, I may get a good bounce to send me back in the direction should they decide to continue the trend. I know what has to happen before it ever happens. Small triggers rolled. This is my first area. Does that make sense, everybody? And as long as I'm above that zone on the large chart, I'm good. If I get sucked into this zone, I no longer have room to trouble because I am literally inside of trouble. So that's your pattern. That's how you'll predict it. That's how you'll see it. That's how you'll enter it. And guys, you can learn how to manage it before you ever go look for an entry. You can set up management by seeing where price is trading on the large chart in relationship to those small triggers that have defined trend. So when I'm looking for a trade, I'm saying, all right, my triggers are up. I've got room to targets. Where is the most current price in relationship to those triggers? It'll either be left, right, or center. This is going to help you to find momentum. My mouse is like super fast. If I am left of the small triggers, I'm on the strong side of those triggers, guys. This is kind of like odds favorable momentum. This is where 1 minute areas have the best chance of breaking. This is where the market tends to give bigger moves. From the right side of the triggers, I'm what we call the weak side of the triggers. This is what we use for entries on the small chart. And on the weak side of the triggers, thank you, Miss Trina, News in 5, guys. This is where 1 minute areas are most likely to create a bounce. This is where quick profit starts to make sense. Not smoking the hopium, trying to get a giant move when the market's trading from a place where reversals may occur. If I'm in the middle of the triggers, I'm in the transition, guys, and I'm aware of 1 minute areas and I'm ready to manage, but I may choose to hold for a bigger move because in one bar on the large chart, I can go from weak to transition all the way to strong in that 15 minutes. So the 1 minute chart is where the management's going to happen, and I'm going to know how to do it before the market ever gets there. And guys, that's trading view. Look at that. Well, the area even went away. Everything reshuffled. Now we're pulling back to support, right? Where's the top of that zone? We're right at support. We're pulling back, and I need a close above the small triggers. Do you guys see it? First, it's up. We are on the strong side of the triggers. I'm in the zone, but a close above the triggers puts me above everything with the trend from the area. And I've got 46 seconds to think about it. Everything that we just talked about, this is what it's going to look like, guys. Everything that we just discussed, this is what it's going to look like. And as a brand new user, I try to stay focused. It's either rules met or it's not. I've got 28 seconds to think about it. I also have news in about 2 minutes. So in a real world environment, I would never dream of entering this trade. But if we get a close above the small triggers in 13 seconds, we will take it for educational purposes. 9, 8, 7, 6, 5, 4, 3, 2, 1. Did not get two corners above the small triggers. Therefore, my rules aren't met. Does that make sense, everybody? Did not get two corners of that bar. Let me make it huge for you. Above the small triggers. Therefore, my entry rules are not met, which means I'm going to sit tight and see what the next bar does. And I've got 36 seconds to think about it. Did that make sense, TradingView users? That's how you're going to time your entries. Let's see what happens. Oh, look at that. The zone went away. That's kind of cool. Let's time our entries. We've got 15 seconds. And right now it looks like that was a pretty avoidable loser, doesn't it? Looks like we didn't have to be in that trade hoping that it goes up. Our rules weren't met. 4, 3, 2, 1. Still don't have my rules met. But Mark, I think it's going to go up. Yeah, but your rules aren't met. But Mark, it's coming from support. But yeah, your rules aren't met. But Mark, what if it goes without me? Well, then it's not your money. And we'll have to capture some of the other $270 million that's exchanged during the day. Guys, that's day trading. That to me looks like an avoidable loss. Are there any questions? Let's see what the S&P does during news. Are there any questions about momentum? Are there any, don't show your butt. Amen. Are there any questions about defining a termination condition? Are there any questions about a pullback to an area inside of triggers to define the perfect entry? Why the rule is not, Boaz? Because my rule says that to enter this trade, let me make it really big. To enter this trade, here comes news. I need an up bar. I got it. From an area. I got it. But I need both corners, Boaz. Both corners of my up bar to finish above those small triggers, not inside. Does that make sense? Because until you clear that hurdle, you're still fighting the immediate strength against the trade. It's a little life hack to keep you from getting run over. And it all goes back to this picture right here. No. So the second one is a down bar. So the rules are really specific. I need an up bar that finishes above the triggers. I don't enter on a down bar. Because what does that mean? The market's pushing down. Not only did I not get my rules met, but now they gave me a bar the other direction. Pretty cool, right? I'm telling you guys, this little thing right here will keep you out of so many shenanigans. So many shenanigans. Allow it to be really black and white as a brand new user. Well, it is down. See the pink arrow over it? See all the pink dots? So if you don't have your dots in, you're not going to know. But that is a down bar. That is an up bar. And your Renko bars went down with it, right? Right to Fibonacci support. No momentum. No clear path. Pretty cool, right? Yeah, the arrow down definitely helped with recognition on that one. So guys, that's my first hour. My first hour is the same hour every hour, guys. It's everything that I do. Repetition creates recognition. That's one of my favorite phrases. And now I'm going to talk about, I'm going to copy these right here because we had a really cool conversation in the room earlier. So before I take a break, I do want to address this because I always say you will create a plan based on your ability to read the indicators. And I want this to be a really solid lesson for you guys because this is one of the best lessons I got. Jen, let me take you off of that. Know the difference between your read and your rules. So my rules say odds favorable momentum, clear path, and a definable entry. My read may give me 100 other ways to do things, guys. My rules are concrete. My rules are irrefutable. My rules are 100% my lifeline for my trading to not break them. So when I say that you will expand your plan based on your chart reads, I'm literally talking about a physical rewrite where you say, okay, and I'm going to show you what I mean. All right, this is my 50-50 trade. And Mark says that the way to optimize my chances of success is to make sure that 3 of the 4 trigger lines are through the area, and that I'm from a strong top or bottom, and that I have momentum on both charts and there's no divergence. And your study may say that with 3 triggers through, from a strong top or bottom, with momentum on both charts, I'm willing to forego a divergence. And I will rewrite my plan to say no second divergence. If the rules are all true, I'll take it with a divergence, but a second divergence will nullify the trade. And guys, this is how trade plans grow. And then maybe you do more study and you say, you know what? I'll take it with 2 trigger lines. But now that I'm only 2 trigger lines, that second divergence thing isn't a factor. Divergence will keep me out of this trade. And guys, that's what happens when you begin to grow with the software. But if you just say, you know what, I'm starting to recognize a pattern. My rules aren't met, but I can't mark yes on my checklist, but it should, it has to, it will. And guys, rewriting your plan, not deciding to become flexible on your plan in the moment. And I know that every one of us have done this. I saw Mark talk about the gap theory, so I'm going to break my rules on the gap theory. I saw Mark talk about a continuation entry, so I'm going to start adding continuation entries. I'm not going to study it. I'm just going to add it because Mark talked about it. And guys, you've got to do your due diligence every time you adjust a plan, because if you don't, you're going to start getting suckered into things that aren't your best options. So I wanted to share that. Strong bottom, 2 triggers through, no divergence, crushed the first one, blew through the second one, annihilated the third one, and now it's where the market shouldn't go. Do you guys see it? How did I know not to enter that trade as a brand new user? Because I am dedicated to following a KISS plan until I can do it on my own. Some of you just got your ass kicked because you decided that no divergence means take it, that you decided that 2 triggers was okay, that you were comfortable with the risk, and I'll just get in at the lowest point to minimize it, right? Guys, there is a way to get there with the fewest moving parts and the highest chance of success. And here's my belief, and my beliefs mean nothing, and then I'm going to go take a break. It is my belief that you could do in trading everything you could ever hope to accomplish with the path of least resistance. 99% of you will change the plan. 99% of you will change the plan because you're bored, because you're fearful that the market is going without you. Absolutely. So Sergio, this is what we talked about. Do you want the short answer or the long answer? Let's do the Sunday school answer. All right, I'm going to take the checklist. And Sergio, this is how I optimize my chances of success as a brand new user. So this is the checklist for taking the 50-50 trade. 3 triggers through the area. That's a no. Boom. Strong bottom. That's a yes. Odds favorable. That's a yes. Odds favorable. That's a yes. No divergence? That's a yes. Why did it lose? Well, 2 triggers is a pretty crappy look, even from a strong bottom. Look at the risk that you had to have on this trade. You had 1, 2, 3 areas. 2 areas over here that you're hoping breaks, 3 possibilities for entry, a ginormous stop. We're talking over $300 per contract. But that simple thing, 3 out of the 4 triggers, Sergio, if you're really following the KISS plan, is enough to keep you out of that trade. And that's why I give you guys the KISS plan, not because it's the only way to trade, but because it keeps you out of the most probable losers. Does that make sense? 2 out of 3 triggers through. There's divergence. Divergence. And what are they doing? They're scrambling, they're pushing, they're taking your money in a trade that you should have never been in the first place. Pretty cool. Ron, have an amazing weekend. So guys, that's what I teach every day. I give you the boring, man, I can't believe Mark is telling me I can't take these trades. Well, Mark's not telling you can't take these trades. Mark's telling you, here's a plan that you may choose to follow. Here's a plan that teaches you to read your indicators. Here's a plan designed to optimize your chances of success. Here's a plan to help you find success until you can write your own plan. Now, whether or not you choose to do it, whether or not you choose to post in my room and ask for feedback, whether or not you choose to use a tracking sheet and learn these patterns and track your progress, whether or not you choose to add pictures of what it means to have the rules met so that you never miss them, whether or not you study the client trades, whether or not you build your own plan, whether or not you do any of these things, guys, that's on you. Your desire to be good at this is not my burden. It used to be. I chose to never let it be again. I'm not the trade police. I teach you to read your indicators. I give you the path of least resistance, and now it's up to you to learn it. And here's the important part. If you have a question, it's your job to ask. I might not know what's on your mind. I might not know what you need help with. I might not know what's confusing you, right? Kevin Schmidt, you said that momentum just clicked. If you just would have said, hey, Mark, can we talk momentum? Kevin Schmidt, I would give you every lesson that I own to make sure that you walked away from that conversation with the understanding that you needed. But if you don't do that, guys, I can't help. So we give you everything you need to be successful. It's up to you to learn how to swing that hammer. I'll be back in 5 minutes, guys. Go stretch your legs. All right, guys, back at it. Whoops, here we go. Back at it. We're going to look at the charts that you guys posted. Did anyone notice termination conditions doing their job? Maybe it's just me, but I think Fibonacci is amazing. I think these areas are amazing. I think it's unbelievable how easy it is to avoid losers with just a little bit of study. That's just me, though. Just me. All right. We're going to start clicking and see what you guys are doing, what you're seeing, what you're thinking, how you're trading, what you need help with. Not a lot of pictures posted, which is okay. We'll spend some time looking for live market stuff, which is always fun. Whoa. All right, I'm not sure why we're getting videos posted. Not sure who did that. Sergio. I'm sure it's important, but we're not going to watch it in the classroom. All right, Pete, Miss Trina, Boaz, and Boaz. And guys, I think I've got them all. If I missed your trade, if I missed your question, if I missed your post, just tell me. Go, hey, Mark, you missed it. Here it is again. Do you mind revisiting? And the answer is always yes. And on that same note, guys, if you got to split early one day and need feedback before you leave, let me know. I'll pause the class for you. Paul says 15-minute up, weak side of the triggers, clear path, and the market pulls back right to the area, gets a close above, and that's a pretty big bar this morning. That's a lot of risk. And then Paul's like, oh, it's not going. And then it catches support again, and it's not going, and it's not going. And then they finally get you out, Paul. And this was a good lesson, and I like this lesson a lot. And the lesson is that you'll always find what you're looking for. If you're looking for the reasons a trade will fail, you're going to find reasons to get out. And I don't disagree. And I told Paul earlier in the room, I don't know that I would have reacted any different than he did, and he may have already split for the day. So he's like, man, look, it's not going, it's not going, it's not going. And then my eyes, with no challenge, no anxiety, no desire to win or lose, says, yeah, they were struggling to get above those triggers, but the smalls were above the large, and that's momentum. And the large triggers kept getting stronger. And yeah, they did pull back, but they ultimately made it to their target. So while he was focusing on an inability to get above the small triggers, I found myself focusing on the large triggers getting stronger and stronger and stronger. And then they retest, and then they actually run. So, and I think as a brand new user, my reaction would have been exactly the same. It's not going. Damn it, I'm going to cut ties. But if you take a step back when you're not in the trade, if you take a step back when the emotion isn't there, when the desire to win or lose isn't there, and you really kind of study, hey, what happened? That's where we start to grow. That's where the spreadsheet pays dividends. Because the spreadsheet has a tracking sheet, and the tracking sheet has a place for feedback from class. So Paul could go back to that picture and say, man, while I was focused on this, I didn't see this. And the next time he takes a trade that's going sideways, he's going to start looking at both sets of triggers, and he's going to start saying, oh, my advantage is growing. They just can't get decisive. Not yet, not in the moment. And guys, I don't expect anybody to see that in the moment, not as a brand new user. But what happens is you're going to go back and you're going to start asking yourself, and this is a drill that I encourage you guys to do, that most of us will skip because it feels like work. And this is probably one of the most important drills you can do, is go back the next morning and ask yourself, what works? And ask yourself, what didn't work? And guys, you'll start to see the things that are bringing you success. And if you can't see them initially, if you're posting in my room, you'll get those things in the form of feedback. Hey, no areas inside of triggers isn't working out for you. Maybe we need to focus on your entry rules and make sure that you really understand that. Let's buy or sell a pullback at an area. And do me a favor tomorrow. Give me just one day focused on that great entry. Last time I had that conversation, that person came back the next day and was kicking ass and taking names. And the same things about momentum and stuff like that. So guys, go through that. Go back and really get in the habit of analyzing your trades when the trade is done. What did it do? Where did it go? How did it react? Take a lot of pictures. So good lesson there. I don't think there's anything wrong in the moment cutting ties. But with a deep breath and a little bit of clarity, you begin to see that nothing ever really got bad in this trade. It just took too long. And that's exhausting if you're not reading your indicators. Great stuff there. Trina, we all had to learn that lesson. I was the absolute king. I think my brother sent me a Burger King crown for it, for talking myself out of the perfect trade because I was scared of losing. And that's all it was. I was scared of losing, guys. If I'm not in the trade, I can't lose. And Jen, this is such a good example. Clear path, odds favorable momentum. Everything about this trade on the large chart is perfect. New users will see one-to-ones over here and say, oh shit, it's a termination condition. I better not take that trade. Jen is at a point in her understanding of the rules which she says, no, there's nothing on the large chart to create a bounce. I'll take this trade. I'll get paid at those one-to-ones. I'll exit if things change. But I'm going to take this trade. Good stuff. And Jen also knows that from a weak bottom, mid-bands are likely to create bounces sometimes, so she's got her management hat on. Great trade, Jen. All right, Victor, are you in here? All right, calling it a trend trade. I want to encourage you guys to stop calling entries that aren't trend trade entries. I can't demand it, but I'm going to encourage you guys. If your entry is not at the area with the close below, it is not a trend trade. It is jumping the fudge in, hoping that that market goes. Why do I say that? You know I have a reason, right? Because when you name your trades, guys, I have stuff for everything. I sit around and write these when I've got nothing else to do. When you name your trades, you know the exact advantages and the exact management plan that goes with that trade. So Victor, if you call this a trend trade, where did it go? Your stop belongs above the pivot high, right? Where the market failed. If you just jump in, how do you define your risk? And Victor, I like it. Don't get me wrong. It's down. Everything's there. The room is there. And you know where the market's likely to go. But jumping in at 89, your stop had to be what? At least 811 points? Getting in here, your risk is half of that. So, and Victor, I like the way you did it. With everything going on, the expectation is that next area. And then to point, I love this. You said exit trade on price turn and white bar up. When you jump in, when you know you're not following your plan, and Victor, I know that you know this isn't in your plan. Why wouldn't you let it hit that area? Why wouldn't you let it go where the market is more likely to go? Because I've seen you do it 1,000 times. Victor, it's because you know you broke your rules and you just wanted to make sure you got out without a loss. Is that fair? So I don't think there's anything wrong with what you did here. And I think it's pretty rad that you made $300. And I think you had the advantages to jump the fudge in. But this is what happens. You talked yourself out of another 7 points, $140 per contract, another $280 on top of that 300 because you didn't trust the trade, because you know it's not a part of your plan. Guys, I'm not telling Victor he's wrong. He should have taken the trend trade, right, Jen? From the area with the close below, with room to the first sign of trouble. That's a trend trade. I don't know. It depends on how you define room. But that's a trend trade. So if you didn't take it because of the room, that's cool. Jen, the point that I'm making is that this is not a trend trade. This is jumping into the market, hoping that it continues what the trend trade said that it would do. And it's hard to manage a trade where you know there's not rules. Because where does my stop go? I can't leave that risk on it. Where's my target? It's there, but with this much risk, no way. I'm going to look for any reason to abandon this trade. And Victor, I don't think there's anything wrong with it. I have to say that 1,000 times. But if you name your trades, guys, you know exactly how they need to be managed. That creates confidence. If you name your trades, you know the advantages that get you in. That creates confidence. And when you deviate from that confidence-inspiring moment, you're more likely to put crazy stops and stupid targets. That is that's an autobiography, not an opinion about Victor's trade. So I think it's a good lesson there. It's one of those things that we need to hear every now and then. And guys, there's times where it makes sense to jump the fudge in. Victor, you had one of those. But I wanted to go back to the language because trend trade suggests a different kind of management. And honestly, trend trade told you to hold that trade for the next area. So good stuff. Great stuff, man. I love it when you guys post in my room. Awesome lessons. The triggers are up. They're in transition. There's room to trouble. There's the pullback to the area. There's the close above. Waited for the pullback for a better entry. Below the trigs, so I think it was breaking a rule. Target made. So let's talk about it, Trina. And let's try and keep it very, very basic. And let me know what you think. With this look, if the market pulls back, if you get a close above, you're saying my expectation is this right here, right? 100%. Cool. So are you also saying, because it's a trend trade, my stop will go below that pivot low? Managing a trend trade like a trend trade. And this is very much like what Victor did, right? You can make the choice to jump in the middle of a trend trade, but where does your stop go? Trend trade stop. You let it play out the trend trade expectation because you said to yourself, it's a trend trade. This is where it should go. I just want a better entry. If you fudge your stop, if you say, I got a better entry, I'm going to put it right here behind that bar above support, well, you're likely to get hit, right? So when you commit to the second leg of a trend trade, you still have to commit to the management plan of the trend trade. Does that make sense? And guys, I don't think there's anything wrong with waiting for a better entry. I love that. I'm guilty of that, without a doubt. Because I understand the expectation, I understand the pattern. And just because it's below the triggers doesn't matter, Trina. What direction are your triggers going? They're going up, right? So if the river is flowing this way and you're going with the current, there's no fight. If the river's going this way and you're going with the current, you're not fighting the immediate momentum. I love this look. You let everything get kick-ass and then you just got a better entry. Nicely done. And then you held it for the target. You held it for the target. You knew that it wasn't the rules-based entry. I did air quotes. You couldn't see that, but you knew based on the pattern, the expectation. Good stuff. Everything is screaming. Man, Ron, this is not your typical trade. You usually try to get out before trouble, but during the open it was moving so fast I let it go. Base hits pay the bills. When everything is screaming, Ron jumps in, jumps out, and guys, this doesn't fit Ron's plan one bit. But through his expertise and time in the market, he said, I'm willing to take and manage. And that's where you get. And there's another one. Weak top, triggers roll down, odds favorable, clear path. And Pete jumps in. And he gets out just at trouble. And he held that one a little longer than you usually do, Pete. Without a doubt. Exit, exit. And then when everything rolls with momentum, Pete jumps in with the momentum and room to trouble and just takes everything screaming down, I'll go down with it. Everything screaming up, I'll go up with it. And since there's nothing in the way to create a bounce, I'm going to find a way to make some money. Pete, this is your picture. You and Ron. That's the SS Woodworth right there. Momentum and path, guys, the first two advantages. Learn them, trust them, you'll find a way to do more with the software. But if you bypass the study of the very basics, it's going to be difficult. Triggers up, potential to break, pull back to the area inside of triggers, make money, out with a loss. Not a loss of momentum. That was an incomplete sentence. Didn't take the next trend trade because of the second lower divergence. You just said, man, with all this momentum, if it's really going to go to the target, I'll let it get above the bouncy things, and I'll just see if I can ride that wave. Really nicely done, Pete. Is it just me, or are you taking considerably fewer chances with your trading lately? Have you pumped the brakes a little bit on some of the aggressive stuff? It's noticeable. It really is. Everything down and nothing in the way. Let's make money. I love this. Jump the fudge in. Jump the fudge in. And Victor, that's what you did on TradingView, right? There's nothing wrong with that. It's just a different way to gauge advantages to do what it is you want to do. I love it. We're running out of pictures fast. Here it is again. Everything is up. Potential to break. Kind of a late jump in for you. Quick profits because it's just jumping the fudge in. Out with a loss of momentum. Get back in on the trend trade. Get paid on the trend trade. And get out when the trend trade doesn't seem to be working. Double dipping. No worries, Victor. Pete, I love that exit. That's a change too, isn't it? That's a big change too. Believing the next one's coming. Nicely done. All right. Was this Miss Trina? Up, strong, room to trouble. Support becomes resistance. Resistance becomes support. There's your entry. And then you're just getting in on the pullback to the small triggers, Trina. Giving yourself a little more room. Just nothing wrong with that. That's your right. Jen, I did discuss, I actually sang your praises a little bit. So if your ears were tingling, that's why. So let's do this. Let me see if I can remember what I said. Oh, you know what we used it as a lesson for, Jen? No, let's go through it again. When the trade is perfect, what we talked about, Jen, is how when you really It can't be range bound in a strong trending market, Pete. That means it's hitting stuff. Um, when it's perfect over here, Jen, what I mentioned in the classroom is when you believe in this look, we were talking about how you find what you're looking for. Oh, it broke out. Sorry. Well, you said crude in a strong trending market, but range bound. Which one is it? You missed a word in there. Jen, what I was saying is that as brand new users, Pete, I'm not going to try. I can't keep up with it without pictures. Brand new users will talk themselves out of this trade because of the one-to-ones. So what I said is Jen is at a point in her study where she knows that this is the perfect trade. And she takes it and she gets paid on it and she exits with divergence from a one-to-one. But you don't let a small chart blip talk you out of the perfect trade. So that's where I was like, yay, Jen, good job. Don't get used to it. I'm feeling ornery lately. I don't know that I'm going to do it a whole lot. Finally got in without a reversal bar because the reversal bar would have ruined your ability to make money if that one-to-one became problematic. It's great heads-up trading. Boaz, 3 triggers through. Pull back to the area. Little late on the entry, right? But it still goes to the fib. Did it slip you on the entry, Boaz? I had one yesterday. The market was so fast where I entered on the reversal bar, and Boaz, my entry was about where your exit was. And I just had to close the trade. I think I made a tick on it or lost a tick on it because the NASDAQ was moving so fast yesterday. I was literally slipped about 8 points. It's the perfect trade, Boaz. Awesome targets just above fibs before news. Great job. And then Boaz again, all of the momentum, clear path, only 2 divergences, not a deal breaker, perfect entry, and then Boaz, man. That's a tough hold. 3 divergences pretty much lets you know it's pushing so much lower. Thank goodness the fib held. Thank goodness the fib held. And it worked out. It worked out. This is one of the trades where I tell you guys, I don't say, dang it, Boaz, don't do that. What I say is ask yourself, when you see 3 divergences in the same price range and you hold that long, do you win more than you lose? I would say do the math and see if you win more than you lose. Repetition creates recognition, Phil. That's my little alliteration. Repetition creates recognition. And it's just it's science, guys. If you study learning, cognitive learning, and this is one of those things that I do. I'm fascinated by the education process, and I look for ways to make education easier, faster. One of those things that does that, and then I'll go to this, Phil. Sorry, because you know I'm going on a tangent. One of those things is called chunking. And I don't know if you guys have ever heard of chunking in education, but chunking says stop trying to learn it all at once. If you learn it in pieces, you can create your trade from the pieces that you learned individually. Because if rule number 1 is momentum, all you have to learn to never get rule number 1 wrong is that right there. Smalls below, wide in direction to the trend, space between means strong triggers, rule number 1 met. And it'll always look the same. So chunking says, learn it. Learn how to define momentum, and then don't let it go with anything else. Don't turn it into a trade. Don't talk about an entry. Don't worry about terminations. Just get really good at momentum. And then learn your termination conditions. Don't try to turn it into a trade. Hell, don't even couple it with momentum. Learn the language that says this is a termination condition, this is a clear path. And then define your entry. And what you do is you take those three things and that becomes your trade. That's one of the things. So repetition creates recognition is my go-to always, which means that if you take 25 pictures of just strong triggers, the repetition of what you see and what you write, and this is important, taking the time to type out why it's strong triggers, what you find is that you never miss strong triggers. You never mess it up. And if you use the language, price reaches an area where my triggers, you never mess up a clear path. And all you're doing is piecing these things together. And you're doing it over and over and over. And that's what the spreadsheet is, guys. The people that take the most pictures of the exact same thing with the exact same language slow the market down. And they do their reads in like a nanosecond. Did y'all watch did you guys see when NASDAQ news hit the other day and I went after it like an auctioneer and all I did is go back what the indicator said, not what I thought was going to happen? That's where you get when you piece it together. That was a lot of fun. That was pretty cool to do. Daily report card journal. Stick with the KISS plan. Yes. Be active in education room every morning. Yes. Post every system trade to education room. Yes. Upload trades to journal. Yes. Today I learned having a plan and process to return to helps after an off-track session. Was able to settle in quickly. Also, momentum trades have triggers pointed in the same direction. Small triggers cannot be turned against even if located on trade side. Also, added clear path to momentum and HVA is a non-negotiable. Remember, you're looking to stack advantages in your favor. If there's no clear path, advantages are lost. Tomorrow, I will remember that base hits pay bills. If there's enough of a clear path to take the trade, there's enough profit potential to exit when it gets there. Amen. Phil, this is brilliant. This is how people get better. I love this. Oh my gosh, I love this. I do the same thing and I do it mentally, which probably isn't as effective as the way you're doing it, but I'm probably also in a different space. But I still go back to every trade that I take. I still look at every entry, every exit, every management, and I always ask myself, am I following rules? Am I doing it right? Am I following my plan? And if I didn't, Phil, I am known to put a note on the desk that says, hey, dumbass, stop trading into areas. Because some days I just want to trade into areas. Great stuff. Thank you for sharing that. Self-analysis, guys. Self-analysis. Being willing to admit that you're not perfect. Being willing to admit that you're going to make mistakes. And instead of brushing them under the rug, committing to fix them. Aaron, momentum, wide triggers, clear path, perfect entry, profits made, no loss taken when the trade fails. Aaron, perfect. You know what, Aaron? You have put so much work into being able to take that trade and manage it like a badass. I want you to have a seat at the table. Boom. How'd you feel taking the trade, Aaron? Were you confident getting in? Yeah. Were you excited to take profits? Did it feel great when it failed that you didn't lose? I hope so, man. You did awesome. Awesome. Everybody can be fixed. All you have to do is show me what you're doing. We'll talk about it. momentum, clear path, cannot take it now. It was working now. Cannot take it, talk it. Perfect. Technically, Boaz, let's nitpick. Are you ready? You'll dig this. We had this discussion with Nathan the other day. When is divergence not really an issue anymore? And I want you to see this. So there's your first divergence line. If I extend it all the way out, Boaz, do you see how the small and large triggers get above it? It's subtle, it's quick, but do you see how the small and large break above it? The count restarts, which means that this is your first divergence with odds favorable momentum and a clear path. This is your second divergence with odds favorable momentum and a clear path. There's your pullback to the area inside of triggers. But if you were waiting for the reversal bar, it gave you a couple. Might have stuttered, but still a rules-based trade. Still a rules-based trade. But they definitely made you work for it. I usually watch, and Boaz, this is a chart read, not a rule. Whoops. When I get two divergences, I'll force the market to take out the previous pivot before I consider an entry, which means that the market has to push down below that previous pivot. Then I'll look for my reversal bar, because usually that second lower takes out the previous pivot. And guys, that's just a chart read. That's not a rule. That is sitting in front of my computer for countless hours, taking countless pictures, recognizing patterns that repeat themselves, that may just initiate a little bit of patience on an entry. Odds favorable, clear path, pull back to the area inside of triggers. Odds favor, second lower divergence, there it goes. There's your previous. And sure enough, that's your potential trouble. Pretty good stuff. How you guys feeling so far? I've gotten through all the pictures. So this is where we start talking about what you guys want to talk about. All right, Miss Michelle. 3 triggers through. Big chart. Needs 0 divergence on pullback to the small chart. Separated triggers. Divergence, don't do it. Divergence, don't do it. Everything changes direction. No divergence. Michelle says, like a cheetah jumping out of a tree, landing on a gazelle, I'm going to pounce on this mother. And I'm going to take that trade. Michelle, outstanding patience. Outstanding patience. You learned from me. Uh-oh. I love that. Is that today? Did you take that this morning? Just now? Because you know what's funny? Is Nathan posted this exact picture, this exact scenario about 5 days ago. I mean, it is 100% the same look. And I really thought that that's what this was. Maybe you were doing market replay. So this just happened. Great job. Is it worth the wait? He's doing so great. Yes. Believe it. It takes a while to trust it. So I am pleased as punch to see you in this room posting. And I hope you're posting all of them and not just the winners trying to impress me. Because it's the mistakes that help us grow. And I'm not accusing you of anything. But when you're recalibrating, guys, find out where your weakness is. Find out what your thing is. And it's easier to overcome it. Can I ask, Michelle, do you need the market flow? Oh, these are just white. That's not market flow. Okay, you just like the white bars. Easier to see. Never mind. I thought you had the market flow overlay, but I like the white tails. That's super contrast, easy to see. That's kind of cool. I may have to steal that. For those over 50, that would be me. I would definitely qualify for that one. That really is. That's so much brighter. I might have to consider that. This is crude oil, guys. Um, 2 triggers through, all the divergences, avoidable loser, and now they're going to have to make decisions on what it is they want to do. Weak triggers, right at a fib. Look at the reversal. That's the sound the reversal makes. Tesla nerd, can you hear me? I wonder if he got it back. I hope he did. Makes me sad when you guys can't hear me. David, how we doing? Z-Robot, how you feeling? Andy, all good? Kevin, good. Sergio, Vad, Jeffrey, Kokif, Muser, Aaron, Kevin, Cav, Morgan, GWC, Victor, Oh, Pacheco, 714, Trina, Boaz, Pete, Alan, Alex, Mark, Net Data 59, Jerry S., good to see ya. Phil, Jen, RC Raymond, Robert Mark, Vance, George, Chariot, Gino, Joel, and Gab. What can I do for you? You showed up, you knocked on the door, you sat down, you grabbed a bowl of peanuts and started watching the game. What do you want to talk about? You're on the phone with it, Tesla? Hold on. Just keep doing what you're doing. Three triggers through. Just like to hang out. Been doing wedding finances. Ugh, Vegas, man. Vegas. I spent $300 on my wedding damn near 30 years ago. It's stuck. When I put it all on black, it ends up on green. Have I told you that story? My going to the casinos with my, well, then girlfriend, now wife. We're like, we're just going to drink for free. Just wait for the, oh, Gino, don't you put that juju on them. We're like, we're going to go to the casino and drink for free. We'll just stand at the roulette table. I'll bet black. She'll bet red. We'll be there forever. It landed on green twice in a row. What's my secret, Phil? You know what the best marriage advice I give young kids that ask that question is? Just don't go batshit crazy at the same time. If you can time it out so you never hit crazy at the exact same moment, you have a better chance. They used to be, Jen. I don't think they are anymore. Casinos were notorious. As long as you were gambling, you were drinking for free. I don't know that they still do that, to be honest with you. I like the John Novak method. John Novak, so years ago, in his younger years, they would fly to Vegas and John would walk into whatever casino he was staying at and he would just buy $20,000 worth of chips. And the second you buy $20,000 worth of chips upon entry, everything you do that weekend is free. And sometimes he'd lose it, but some days he would cash out for $19,000 and he would eat and stay and fly and everything was free. So there's ways to buck the system. Yeah, Morgan, it can be done. It can be done. Anytime it gets hard, remember how much you loved her the day you asked her to marry you. Don't let go of that thing. Because it will get hard. Even the best marriages have struggles. There's your marriage advice. But I teach people to read indicators. I don't give trading advice. I'll give a little marriage advice. Stick it out. Don't be a quitter. Happy wife, happy life. F that. If you can't get your shit together, I'm not going to make you happy. Sorry, Jen. I'm just kidding. Been married for 37. Right now, my wife's ears are burning and she's mad. She's like, oh, he's saying things about Jen. Yeah, Michelle, but I'm a guy and I don't communicate well, so you don't want to listen to me. Uh-oh, that's the untitled workspace. Let's get rid of that. Guys, we're at that point where really it's whatever you guys want to talk about. How about we open up the NASDAQ and get a little crazy in front of us? Um, One of the things that sets apart next gen education, I think, is the time that we put in to pattern recognition, guys, to see in the little things that new users don't see. And if you just bring up the conversation, I'll share them with you. But I can't sit here and go through everything that could ever happen with the software. So I need a little direction. Um, Amen, Cav. Amen. 34 years, Robert Mark. That's awesome. I don't know if it's me, but NASDAQ is moving so fast the whole week, the whole day. Usually is for a couple hours, but now the whole dang thing. It has been, Sergio. The NASDAQ, guys, if you don't have cat-like reflexes, the NASDAQ has been hard. Sergio, I can't tell you how many times on the NASDAQ that I would go. So I enter on reversal bars, Sergio. That's just what my plan says. I can't tell you how many times I right click to put in a sell stop or a buy stop. And before I could click it, it was already 20 bars past. So you've got to make a decision. If it's too fast, you just can't, if you can't react, right? And man, I think I don't know if I took the picture, but just an example. So when the market moves like that, and that's, Cav, I had a trade where let's just say I went short right here for whatever reason, hypothetically. And my standard targets are get paid and out at trouble. And it's about $500, I think, when I'm trading on a 2-lot is what it adds up to. And I got in, and it says stop filled. That's what gets me in. And then it said stop filled. And then it said stop filled. Before I could ever even put my stop in the right place, the market was all the way down here. And I had to squash that feeling of, damn it, I just missed out on 30 points. I just missed out on 30 points. I didn't. I took my profits. But it happened so fast, I couldn't readjust. So that's part of it sometimes. Look at the NASDAQ, right? Whew. Clear path, everything's up, area's on the wrong side. If you were going to take it, oops, I have to put that on sim. You might say, see how fast that was? You might say, I'll take it with a reversal bar. I couldn't get it in time. And in my plan, I would have totally taken that with a reversal bar. But I would have missed that trade. And that would have been my second target, and that would have been an awesome trade. But sometimes it's too fast. And you can switch to ES if you want, right? The setup doesn't care. The pattern is the pattern, whether it's NASDAQ, whether it's crude oil, whether it's the S&P. Oh, did anybody catch this one? That's 32 flavors of sexy, isn't it? Strong bottom, odds favorable, pull back to the area right inside of the triggers, go to the fib. Jen, show me that trade. ES is very fast too. Boaz, momentum trade, strong triggers. So the only thing that you didn't get, Boaz, was the snap back to the fib. The only thing you didn't get is that little snap back to the fib for the momentum. Does that make sense? For the textbook momentum, no pullback to the fib. Other than that, yeah, everything said, let's go down. All right, Miss Michelle. There it is. Michelle goes, wait, I studied. You've got stuff I don't have. 1056, 1056. You've got one-to-ones that I don't have. But that's it. And you just catch it with a little confirmation, and there it goes. Michelle, can we have a little fun real quick? Do you remember when you would go short right here, thinking that it had to break, and you would go long right here thinking that it might go up, and you would maybe go long here thinking that it might go up. You're like, I gotta get paid. And now you're so mellow. Mellow seems to pay well for you. That was yesterday. We all have to beat those demons. Robert Mark, I've got my NinjaTrader data right now. Let me see. Yeah, right now I've just got my NinjaTrader data. So CQG is AMP futures. So I do have AMP futures CQG over here. Or at least AMP or TradingView's live data package. On NinjaTrader, I've got the NinjaTrader data. And it might be me. So let me do an F5 and rewrite my Ninja script. Reload my Ninja script. Whoop. I just killed it. I'm about to crash. So it could be me. But guys, I also cleanse my system almost every day. I always delete cache. I always delete tick. And usually 2 or 3 times a month, if not more, I reset, repair my database. So I do a NinjaTrader enema multiple times a week. And if you don't do that, if you don't get rid of the old data and stuff like that, there could be difference a little bit. I don't know what a latency is. I mean, I do, but I don't know how it affects data. I don't know that I should ever admit just how not smart I am sometimes, but I just did it. No, I do it every day. No, not at all, Gino. Reduce the slippage. Oh, I think slippage, Robert Mark, and I could be mistaken on this. That's a result of the market hauling ass, and there's just nobody there to get your side of it. And sometimes it's one way or the other, good or positive or negative. I always thought that had to do with the speed of the market, not the data. I know CQG is like microseconds. But if there's so many orders that can't get you in at the price you want, that's when slippage jumps in. Limit orders get slipped a lot. I don't know, Michelle. I don't have the answer. Here, let's do this. One of the things John Novak did do for you guys, chat said it can save you 5 to 2 ticks, 0.5 to 2 ticks. That adds up, right? Why not? Like, why not give it a shot? That would add up. Depending on the market, 2 ticks could be $25. Michelle, hold on. There we go. If you go through this right here, the NinjaTrader best practices, I believe it addresses all that good stuff. Cleaning stuff out, making sure that everything is good. I think it even talks about making sure that your computer, the graphics, I mean, this is like everything. And I don't know that it addresses Norton, because not everybody has Norton. But I mean, yeah, that goes through all of it. There's the Norton stuff. So that's what he was talking about. Daily computer cleanout, not required, but we like it. So yeah, it's in there. No, but there it is. Reanalyze and make sure there's no issues every day. Cool. Boaz, with TV, can I go live with live, but not with demo? So, Boaz, if you want to trade your money, you're going to have to buy data. And if you're doing it on the demo, I don't know that that's going to work. I'm not sure that I have the answer for you on that. I pay for So I pay for the premium. And then where's the data? For the demo of TradingView, Boaz? Is that what you're asking? I don't know. You would want to reach out to TradingView for the TradingView question. I think that when you have it and you have data, paper trading is your sim trading. So paper trading should be there as long as you have data. If you don't have live data, if you're not paying for TradingView, I believe there's a 5-second delay. I hope that answered the question. Well, paper trading is just simulated trading. You want to trade live. There we go. I've got this one. I pay $7 to make sure that I have data. So if I want to trade my own money in TradingView, I'm going to need that data and I'm going to need a broker. Whichever broker you choose. They have a list of them that you can go through so that you can trade on there. So you'd have to have your TradingView. You would have to have data. And you would have to have a brokerage. And I don't know if your brokerage, let's say you're going with Oanda, whatever that is, I don't know if they supply you the data when you open an account. I know NinjaTrader does, but I've never tried to log in with NinjaTrader on TradingView, so I don't know if it works. If you're with Apex, Tradeovate is your data supplier, and you open up the Tradeovate so that you can trade it on TradingView. Did that answer? I hope that made sense. So there's more than just data. You have to still have a broker. Are you looking to do prop firm stuff? Okay. Are you trying to use it for the prop firm? Because if you're trying to use it for the prop firm will supply you the data. Will give you the credentials through AMP, CQG. And then you don't have to make that purchase as long as you have an evaluation or a semi-live account. The funding company will. When you say demo, I'm not sure what you mean. Are you getting a demo of TradingView? So you have like the 7-day demo of TradingView? I confuse easy sometimes, guys. And we're not done with the conversation. I'm just going to open up Nathan's pictures. Because I want to make sure that you get your answer. You use AMP for trading in Ninja. Okay. You can't log in with your AMP credentials on TradingView? You may want to call AMP and ask them how to do it, because I don't think I have your answer. And this is why I teach people to read indicators. Okay, you would want to talk to AMP about that. I'm not sure why that is the issue. Our whole prop firm is using AMP. So I know that it can be done. Yeah, CQG. That's what you get with the prop firm. So I know it can be done. I'm not sure where you're having a challenge. You may want to reach out to AMP and let them help you out with that. Just go, hey guys, I want to use you on TradingView. What gives? Have you tried logging in with AMP? Have you tried going here and dropping your credentials in? Okay, yeah, I would call AMP. I would just give those guys a holler and let them help you through that. I'm sorry. I wasn't very helpful there. Okay. Yeah, get with AMP. I don't think I have your answer, unfortunately. Um, Odds favorable, clear path. The mid band wasn't in the triggers yet here, Nathan, so you waited for the one that was. And you exited with the third. It's perfect. So, Nathan, are you actually doing this live yet? Or are you just going back and circling? Okay. What are you doing live in the moment to build You know the patterns, right? You got the patterns. Crank that simulator up, man. Let's see you trade. It's all theory. It's all bookwork right now, right? You've been in the dojo learning how to break a board for the last month. Let's go see if you can kick a little ass on the streets. Fire up that simulator, man. Let's see how you react when the market is moving. Because your hindsight repetition and recognition is solid. But that's just part of it. Odds favorable, clear path, perfect entry, second lower divergence, awesome exit. I don't know why you didn't annotate on your entry chart. Odds favorable, 4 triggers, perfect entry, maybe make a little money and then it fails. Once again, you can do it on paper all day long, man. You are rock solid on paper. The 1-to-1s are just 2 bars up from the pullback. Is this still too close to the pullback for KISS? Are the 1-to-1s inside of the triggers? You know where I'm going, right? Did it pull back to the 1-to-1s inside of triggers? There's a reversal bar, and there's a pullback. It did, Nathan. 100%. It was short. No, I said if it dissects. We didn't say anything. What I said to you is that if your reversal bar dissects the area that you're hoping creates a bounce, is that area really creating a bounce? And the answer is no, right? If the reversal bar dissects the area you're hoping to use for a bounce, that's not really your area for a bounce. So Nathan, did it dissect the area you're hoping bounces? Just go back to the simple. It's a good area. Absolutely, 100%. It pulled back to an area inside of triggers. Perfect. Perfect. Momentum, path, perfect entry. And it does fail, but not before you make some money. Nathan, every one of these is perfect. Every one of these is perfect. So now, let's take your awesome book study and see how you are in a real fight, right? Let's see how you do when the market is moving, because that's the next step. Now that you know what you're looking for, now that you've got pattern recognition, now that you could teach this class on what the perfect trend trade looks like, now you've got to recognize it in the moment. Now you've got to put the pressure of following your rules in a moving market. You got to do it. That's what takes you next level. I believe in you. So the book work is done. You're welcome. Now we're going to go test drive. Now we're going to go see how things work out in a live market. And Nathan, I want you to be prepared. I want you to be prepared to make mistakes. I want you to be okay to make mistakes. I want you to accept that mistakes happen. And I want you to believe in your heart of heart that when the market is moving, your reaction time is going to slow down just a little bit and you're going to second guess some stuff. That's part of it. That really is. But that's why simulator is so amazing, because when you do start getting that simulator, you start realizing that when you know exactly what you're looking for, Nathan, the market isn't that intimidating. When you know exactly where your entry comes from, it moves a lot slower. When you wait for the large chart advantages, that's when things all work out. So, and let me show you what I mean, because I love doing this. Whoops, I should not mess with that while it's loading. It's probably going to crash. Let me let this load up. And I want to show you exactly what I mean. And guys, this will be for everybody in the room, not just Nathan. Nathan is the catalyst for this one. But I want you guys to see how you'll know exactly where your trade is coming from before it ever gets there. How you'll know exactly where it needs to get. How you know exactly what it has to look like. And as soon as this is done loading, we're going to go do that. I see some new faces in here. Con, nice to see you. I like it when you guys put your face on there. Let me see your smiling mug. Y'all don't want to see mine, but I like to see yours. Feel like I know all of you. Almost there. Almost there. Come on, NASDAQ. Are we there? We're there. Cool. All right, let's go find a 4 instance real quick. We'll use the one on the ES. All right, Nathan. I want to find one that's just a little bit smoother. You know what? I don't even care if the large chart's met. So don't even look at the large chart. Nathan, I'm going to show you what I mean here. And guys, this is an example for everybody how language pays dividends. So we're going to assume that the large chart rules are met, that there's odds favorable momentum, and that there's a clear path. Is everybody good playing this game with me? And the market is trading all the way up here at 68.95. We all good? Does that make sense? Large chart rules are met 100%. So my rules say I'm going to buy a pullback at an area inside of triggers. That's the magic phrase. There hasn't been a pullback. The market is screaming without me, and I'm desolate. But check this out. And Nathan, when you go live, I want you to do this. There's your triggers, right? Before the reversal bar ever happens, there's your triggers, right, Nathan? Whoops. Top to bottom. Stop it. There's your highest point. There's your lowest point. Before the market ever reverses, Nathan, you could put a limit order above that highest point, right? Because the language tells you exactly where it's come from. And then the market goes up, and now my 1-to-1s are the highest point. And I know right where the trade comes from. And it hits the 1-to-1s, and I'm in the trade. And Nathan, I know where my stop goes. And then it bounces, and I know where my new stop goes, kiss plan. And then it runs, and it hits a fib, and I just made money. So if you learn that lesson, I'm going to buy a pullback at an area inside of triggers, It doesn't matter if the pullback's happened yet. You know exactly where your trade's coming from before it ever gets there. Does that make sense? So when you go live, embrace the language, man. Embrace the language that sets you up for success. And you'll find that trading isn't really that difficult. It's not trading that's difficult when the rules aren't met. All right. Phil says, zone wasn't in there when I entered. So everything was up. You had room to trouble. Here's your termination. From your termination, the smalls get above the large. The market pulls back to the HVA. And it just runs because there's nothing in the way, Phil. When you have an HVA trade set up with the trend, that's solid. Not only are you not fighting the trend, but you're also taking advantage of the termination. You're also taking advantage of the HVA. You're also taking advantage of the momentum. Holy crap, Phil, this is the holy grail. And you rock start it. One lot, $2,300. That's amazing. It's just patterns, Nathan. Stopped you out for 2K. Oh, you poor thing. Can I pretend to be sad for you? Hell no. I'm going to celebrate. Phil, what a great way to end the week. All right. Triggers are up. Strong side of the triggers. Market breaks support, pulls back to support. Little late entry, right? But you make sure everything's going. And easy money. It's a $600 trade, Trina. $600 trade. It's not a momentum trade, right? It's a break, it's a pullback, and because your small triggers are already up, Trina, I like the patience. I like the patience. You're like, let me make sure that I at least get an up bar. It's beautiful. Nicely done. Nicely done. How'd your eval go? You still in it? You don't have to answer in here if you don't want to. I blew out my first eval in like 8 seconds. It was ugly. I probably blew out my first 10. That was your second trade on the eval? Nicely done. Why are you showing me so many awesome trades and not taking them on your eval? Good job. Trina, the plan's the same whether it's live or sim, right? You're the only one that knows whether it's live or sim. Do you trust your plan? Do you believe in your plan? Do you believe in your ability to execute your plan? All right, I believe in your ability too. Strong girl that shit, right? You're good at this. You put so much time into this. It's not your plan that's the challenge. It's not following your plan that creates challenges for people. Great job. Great job. I'm one of those people. I work on attaboys. I love attaboys, attagirls. If you tell me I did a good job, I try to do a better job. So I try to throw those around in the room a little bit. All right, there's the NASDAQ. What do you guys think? That's a pretty good one, isn't it? You've got a question about tracking your trades on AMP. How do you see your win-loss totals for each trade? Dollar amount, do you have to calculate? I'm not a fan of math. Me either. Not even sure how to calculate. Wayne tried to show me, but his brain works so differently than mine. I was lost. No worries. I'm with you, Trina. Here's one for the English lit majors. Are you talking about with Nexgen? With Nexgen Pro Trader funding? Cool. So John Novak just introduced 2 days ago, 3 days ago, how to see your trade by trade, live stats versus the drawdown, everything. There's your video. It's 2.5 minutes. That is one of our recent and really awesome breakthroughs. Yeah, man, it's good too. And while we're here, guys, if you're not following Nexgen Pro Trader Funding, if you're not following Nexgen Software Services, get in there. Every time we post something, like when I post a short, who's that good looking fella? It's funny. I'm the only guy that teaches indicators wearing tattoo parlor shirts. Um, Subscribe, like it. You may catch something cool. All right, 10K. Everything is up, pulls back to the area. So you fudge the entry rules, right? For the traditional trend trade 10K. But you're like, with this look, with all of this momentum, with room to trouble, I'm going to buy the HVA. Nothing wrong with that. It's not a true trend trade. It's an early entry for a trend trade. But it sure is nice. Great job, 10K. How can I set up the brackets to mimic the Nexgen Pro Trader funding in paper trading? I don't know what that means, Wayne. To mimic what part of Nexgen Pro Trader funding? We're going to have to talk through this. It's not because it's a bad question. It's because I don't know what you mean. You too, Phil. Have a great weekend, man. I like it. When you enter the trade on AMP, you want to set up the brackets. So, hold on. Woo. So click, let me get back into paper trading real quick. And let me see if I have this right, Wayne. If you click trade, it'll give you the ability to set up stops and targets and all that stuff. Is that what you mean? I don't know that I understand what you mean by brackets. It automatically adds brackets. So when you enter the market, your stops and targets are already in place? Is that what you're saying? Okay, I don't know. I don't do that. You can do it with this. You can say, I'll put in my profits and targets. It's the same, whether it's CQG or... So this is what you're going to do to create the brackets, right? My target is already defined. Maybe it's too far away. So we get that tick number in there. Whoops, I entered. So you get your ticks in, and you get your ticks in, 4980. So maybe this is paper trading. Is that what you mean for brackets? So when I enter the trade, it's already where it needs to be? AMP Live, how does it add them? AMP Live shouldn't tell you where your stops and targets are. And I've gone live with AMP. So unless you already have the brackets in place, when you buy with AMP, you have to slide your profit target. You have to slide your stop loss. So are you using a little drop down right here instead of hitting buy? Are you using that little drop down with the predetermined stuff? So if I do this, Boaz taught me this the other day, which is pretty cool. So if I have this in and I save it as a preset, we'll call it, my preset's name is Wayne now, right? So now if I put my preset in, there it is. And it says that it's a limit order. And I don't know, that's still not working. Maybe trade has to be up. And then I do my preset. No, I don't know. If you do a buy stop, so if you right click and do buy 10 stop, when it fills, I still have stop loss and profit target. I feel like maybe if you do it, maybe there's something predetermined there. Yeah, Wayne, I don't know without actually seeing it live in motion. I don't know without looking at your settings. I don't know. Get with Jason, see if he can help you out with it, or even better, um, maybe there's something in the knowledge base that'll help. When you buy or sell, what price is given you with paper trade? Well, Boaz, if you're on paper trading and your data's delayed, it's going to give you the wrong price, right? So if you look up here and you see an orange D, that means that you're on delayed data, which means that you might think you're getting in at 93, but the market may already be down here at 76. So delayed data will do that. Can I practice on AMP in demo? Yeah, so if you're logged in, well, you need to be on paper trading. Paper trading is not your evaluation. Your CQG credentials, Wayne, are your account. That is your trading account. So you would have to go to paper trading. That's like saying, can I be in my live account on NinjaTrader, but have it only qualify for SIM, right? If I'm in my live account, it's going to my live account. I have to make that switch to paper for it to be paper. Oh, look. And I might be misunderstanding, man. Boaz, are you delayed? Is that why it's doing that? And Wayne, I told you you might have to be patient with me on this one. I'm trying to get, because I've never done what you've done. I don't know how to recreate what you're doing. Okay. Yeah, you'll want to lose the delay. Okay. When you log, I haven't logged in forever, man. I can't make money in the CQG. I don't have an AMP login. Well, I do, but I don't have an account. So let's do it for science. Let's do it for science. I do love science. My trading accounts, I don't have any. Let me purchase one real quick. I'm going to go to the side. You guys don't need to see my stuff or my code to not actually have to pay. Bum, bum, bum. Bum, bum, bum. Almost there. Not giving you that one, Gino. All right, so now I've got my account. Thank you for your purchase, Mark Novak. You're welcome, guys. So now, hey, Sergio, take care, man. So now I'm going to log out of paper trading. Bum, bum, bum. And I'm going to go log into my AMP account. And once again, I love you guys, but I'm not going to show you my AMP login. That seems like a bad decision. So give me 1 second off the side here. Six, five. Probably have a password somewhere. Sign in. Let's see if that worked. I think it did. All right, here we go. Boom, boom, boom. That's how easy it is to get a $150,000 account. Pretty cool, right? I don't have any option to go to demo. I've got one account loaded in. I've got an eval account. There's your brackets management. Maybe that, Wayne. Oh, look at that. Unclick brackets management. Maybe that'll do it. But I don't have anything that says go to paper trading. I've only got the one account. And there's no drop down, which means that I can't go to sim trading if I'm logged into AMP. I would have to log out of AMP, and then I'd have to go back and log into paper. I think it's wonderful, Boaz. It took me a half a second to click over to paper. And if I'm not mistaken, once your credentials are in there, let's log out of paper. And I could be mistaken. Nope, it will make me log in again. Seems like a good safeguard. Log out of paper. Yeah, I did, but I'd have to put my credentials back in. Mine doesn't save. Maybe I don't have it saved. I guess the answer is